Now we move forward. And now we're going to talk about internally generated intangible asset. How do you do accounting for internally generated intangible asset, and what is the meaning of internally generated intangible asset? When you are trying to build the know-how in the organization, when you're trying to, let's say, build the software code in your organization, right? When you're trying to do a in-process research and development for drug discovery, for example, in your organization. We already said that if you're doing branding or you're doing advertisement, you're doing goodwill generation, now those are anyway not eligible for capitalization, outrightly rejected, not eligible. These are all period cost expensed as incurred, from that perspective. But there's still a lot of money which you're spending that may be eligible for capitalization, and for that you need to actually divide them into two categories broadly, right? Which is the research phase or the development phase. And if you're not clear, you follow the principle of conservatism, right? And then you simply expense as income. If it is a research phase, expense. Research phase, expense as income. If it is a development phase, then you want to look at the recognition criteria. What are the recognition criteria? Is the cost is reliably measurable and there is a probable future economic benefit. And we're going to deal with a whole host of other criteria which are in a way given. Then you got to capitalize as intangible asset. If it doesn't meet the recognition criteria, then you got to again expense as incurred, right? So you got to be conservative, right? I think that's what you need to look at. Again, commonly what we see in some of the companies, we see a website development cost is what has been capitalized. We see some in pharma companies, some drug discovery, after the development phase, some companies do capitalize. We see in some of the software companies, we see some cost in a way being capitalized. Internally generated software which you're going to use for the purpose of your operations, like your ERP implementation cost and all, they are kind of being capitalized, so on and so forth. So there are some of these costs which are generally available for capitalization, but more often than not, the more dominant intangible asset we see in companies' balance sheet or financial statement is the externally acquired intangible asset. And more often than not, again, those externally acquired intangible assets are determined or derived in a business combination, right? In a business combination. And that's where those 5 different categories of intangible asset which you can potentially acquire in a business combination, whether it comes from a legal right or contractual right or customer related or artistic related or technology related, everywhere in a way it becomes important. Now let's try and quickly understand the distinction between the research phase and the development phase. And why this distinction is important is because research phase cost is required to be expensed as income. All right. The development phase cost is allowed to be capitalized, whereas the research phase is required to be expensed. So what is the meaning of research phase? Activities aimed at obtaining new knowledge. The search for evaluation and final selection and application of research findings or other knowledge. The search for alternatives for material, devices, products, processes, the formulation, design, evaluation, final selection of alternatives. So when you are still in the discovery mode, you've not figured out yet what's the best possible way to deal with this situation, what's the best possible answer in a way, and then you put your energies in terms of further strengthening. Once you've figured out the answer, then you've got to see how to establish the answer, from that perspective. So the research phase is all to be expensed as incurred. When you look at the development phase, right, the only exception to the research phase cost which is allowed to be capitalized is in a business combination. And I'm going to talk a lot more about this when we're going to discuss Ind AS 103, okay, which is where in-process R&D is allowed to be capitalized, only in a business combination. Otherwise, research costs are required to be expensed as incurred. The development phase, like design, construction, and testing or pre-production of pre-used prototypes and models, now that's allowed. Designs or tool, jigs, dies, molds, design, construction, and operation of a pilot plant that is not of a scale, design, construction, and testing of a chosen alternative, etc. Now, these are in a way development phase. So the research phase is expense. The development phase is allowed to be capitalized. The further definition should be recognized only if entity can demonstrate. The more criteria, right? Even if you are in development phase, you can only capitalize if you can only capitalize if you establish the technical feasibility of completing the intangible asset. Just because I've started developing doesn't mean that I'm going to capitalize it. You got to demonstrate that you have the ability and the resources to complete the development work. If you have that ability, you will be able to capitalize this. Intention also is to complete, ability to use or sell the intangible asset, how the intangible asset is going to generate probable future economic benefit. And remember, the probable future economic benefit can be generated either by selling it or marketing it or by way of internal use. You can do it in multiple ways. Availability of adequate technical, financials, and other resources. Just because I want to do it doesn't mean anything if you don't have money to in a way fund it and develop it. So you got to have the ability to also fund it, develop it, ability to measure reliably the expenditure attributable to the intangible asset during its development. You will also be able to measure it, right? The cost has to be reliably assessed. If all of this in a way is being met, then you are eligible for capitalization. We talked about the pharma industry. In pharma industry, generally we need to have regulatory approval. So in common, we see in practice that till the time the regulatory approvals are obtained, everything is in a way expensed. In some limited situation, we do permit companies to capitalize the cost of intangible asset, where they can demonstrate with high degree of confidence that everything what they needed to be done is all of that has been done, and there's no reason for the regulator to actually not to approve what they have done, and they can demonstrate the testing efficacy of the drug, relevance of the drug, and the probable future economic benefits, so on and so forth. But ordinarily, in most of the pharma companies, what you will see that you don't see too much of intangible asset, whereas the tons of money is what they spend on research work, right? In terms of doing the new drug discovery. Let's look at this example of a pharma company. Pharma Limited is developing a new drug that has successfully completed phase 1 and 2 of clinical testing. Phase 1 and 2 is all done. The drug is now in the late stage of phase 3 testing. That's the testing we are all going through, the COVID testing. The regulatory filing has been carried out and approval is pending. Management believes it will be favorably treated by the regulatory authority because it meets a strong unmet demand. The entity has also created a production facility for manufacturing the proposed drug. Should management start capitalizing the development cost? So what point in time you should start capitalizing the development cost? So this is largely a theoretical question. We don't have the numbers to compute how much to capitalize, whether to expense, so from a principal perspective, in a way is what we saw, that the starting point, right, for capitalization is that research phase is over, the development phase is out there, and you can actually demonstrate that there's a technical feasibility of the product has been established, and you have the ability to complete it, you have the ability to generate future economic benefit, you have the resources to ensure that you will be able to complete the drug discovery, and then ability to market it. All of that is what you will have to demonstrate. If the answer to that is yes, then you will be able to capitalize it. In pharma, I think there's one more element, because you need regulatory approval, and hence what is your degree of confidence on that regulatory approval? How do you demonstrate your conviction? That will also become a basis for you to determine that from which point you should start capitalizing, right? After receiving positive response, that may be the point that you may want to start capitalizing. Once expensed, it is not allowed to be recouped. I think that's another point you need to remember, that once you have expensed something, you are not allowed to say that in the previous year I expensed, or in the previous quarter I've expensed, can I now recoup because now I have the regulatory approval? It doesn't work like that. Once it has been expensed, it's a period cost. It is not allowed to be recouped from the profit and loss account, right? Now, we're going to deal with this question which came in May 2019, right? Now, that's a very, very important question, and this is where it is trying to distinguish between the research phase and the development phase. And now, how you need to determine the accounting for this particular scenario. So, what's the question here? CRP Limited is engaged in developing the computer software. What is it we are doing? We are developing the computer software. The expenditure incurred by CRP Limited in pursuance of its development of software is given below. So what paid? INR 150,000 towards salaries of the program designers, right? Incurred INR 300,000 towards other cost of completion of program design, right? I'm still trying to figure out the design. Now, incurred 80,000 toward cost of coding and establishing the technical feasibility. I haven't yet established the technical feasibility, right? So this is the cost which I've incurred towards establishing the technical feasibility. Now paid INR 300,000 for other direct after establishment of technical feasibility, incurred INR 90,000 towards other testing cost. I have now established the technical feasibility. I'm now going to incur another 90,000 for other testing cost. A focus group of other software developer was invited to a conference for the introduction of this new software. So I'm trying to now do a marketing something. Cost of the conference aggregated to INR 60,000. Cost of the conference is 60,000. On March 15, the development phase was completed and a cash flow budget was prepared. Net profit for the year 2017-18 was estimated to be equal to 30 lakhs. Right. That means this product has some value, right, in the marketplace. So there is a technical feasibility and there is a probable future economic benefit is what I can derive from the sale of this product. So how CRP Limited should account for the above mentioned cost as per relevant Ind AS. So you need to understand what is the research phase here, what is the development phase here, and then what is permitted to be capitalized, what is required to be expensed. So if you see here, this is a research phase to be expensed, this is a research phase to be expensed, the cost incurred in establishing the technology feasibility is a research phase. All these three are research phase. Now, anything which you paid after the technical feasibility has been established, other testing cost, the conference cost, the marketing cost is not eligible for capitalization, and this 30 lakh is only trying to demonstrate there is a business case here for you to invest in this. So we look at the answer here. So again, here the step one, recognition criteria. Have you met the recognition criteria? Remember the recognition criteria that it has to be identifiable, in a way it is separable, or it has contractual or legal rights. So it is identifiable. There is a code which is being developed, right, which you will be able to separate it, market it, internally use it, etc., etc. Now it is internally generated, so you got to distinguish this between the research phase and the development phase. Now when do you capitalize it? Do you have control over this, and you can generate probable future economic benefit because you are anyway developing this, so it is presumed that you have control over it, and we can generate 30 lakh rupees based on our assessment, the probable future economic benefit, and hence those criteria are also met. But now the criteria are met, but the research phase cost I need to expense. Only the development phase cost is what I am allowed to capitalize. So 5,30,000 is what I am going to expense, which is my research phase. 3,90,000, which is 3 lakh plus 90,000, is what I am going to capitalize. Other cost, which is the marketing cost, is nothing but an expense. I am not supposed to capitalize this. The only thing which is eligible for capitalization is the development phase. All right. It's important. It's important for you to understand this distinction and remember this distinction. If it is an internally generated intangible asset, the research phase goes to P&L, the development phase goes to capitalization. However, if you would have purchased this software, right? Now, if you would have acquired this software and let's say you would have paid, not 3,90,000, but actually you would have paid say 15 lakh rupees, for example, to purchase this software. If you would have paid 15 lakh to purchase this software, then the entire 15 lakh was eligible for capitalization, right? Even though the company which has sold you the software, they were only able to capitalize 3,90,000. But if you have purchased the software in an external transaction and you have paid 15 lakh rupees for that, then you're eligible to capitalize entire 15 lakh. And that's the distinction between amount which I paid in an external transaction versus amount which I paid from an internally generated asset. And why this distinction is important, because unless we don't have more stringent rules for internal cost, companies will end up capitalizing everything, right? So it's like, whatever is coming in is revenue, whatever is going out is actually asset. So that is why, the rules are fairly stringent. Rules are stringent to say that that's not allowed, right? That's not allowed. So whatever you are incurring internally, you got to separate them into research phase and development phase. Only the development phase is allowed to be capitalized. But if you do an external transaction, there's a more better evidence, and the answer can be different, from that perspective. So again, just to give you a perspective, what costs are included, what costs are not included. Again, you can also analogize this to the fixed asset guys, and the direct costs are included, the indirect costs are kind of not allowed, from that perspective in general. So what is included here? Cost of material and services, cost of employee benefits, fees to register a legal right, amortization of patent and license recognized from the day the recognition criteria, which is your technological feasibility. All the research phase is over, development phase is started. Same for indirect cost, overhead to the extent necessary to generate the asset and can be allocated on a reasonable and consistent basis. Borrowing cost in certain cases, so you can allocate some of these limited indirect costs. Otherwise, if it is not necessary to incur this cost to bring the asset to its present condition and location, for your ability to operate it and use it, those costs are not allowed to be capitalized, right? Cost already expensed are never recognized in balance sheet subsequently, which is the point which I made, that once it has been expensed, you are not allowed to capitalize it subsequently, from that perspective. So what are the costs which are eligible for capitalization? Direct cost and some element of indirect cost. And if you have already expensed it in any particular accounting period, then you are not allowed to recoup that expense and capitalize it in a subsequent period. So cost not to recognize it is selling, administrative and other general overhead expenditure, unless it can be directly attributable to preparing the asset for use. So otherwise these are not eligible for capitalization. In any inefficiency or initial operating losses, they are not eligible for capitalization. Expenditure on training of staff to operate the asset, that also is not eligible for capitalization. So again, you got to understand this, that what type of cost which I can capitalize, from which point forward I am allowed to capitalize. In the case of an internally generated intangible asset, the hurdle rate is high. The hurdle rate is high for your ability to capitalize an internally generated intangible asset. Now we're going to quickly deal with this with the help of an example, right? A laboratory is developing a drug, right? You're developing a drug to cure TB. The management has determined that it meets the criteria of Ind AS 38 and that certain development cost must therefore be capitalized because regulatory approval has been obtained. Management is unsure what cost to include, what cost you can include to capitalize. So you remember the direct cost and certain type of indirect cost is what is eligible for capitalization. So the direct cost plus indirect cost. Indirect cost including borrowing cost. All right, including borrowing costs. We just talked about this, but for you to establish the technological feasibility, you obtain the regulatory approval, you have the ability to develop the product. This product is going to generate probable future economic benefit. Once you met all of those requirements, then the cost which you have incurred subsequent to that date is what is eligible, which is the direct cost and the indirect cost. What could be potential direct cost here? Employee benefits for personnel involved in the investigations and trials, including dedicated internal employee costs, compensation paid, directly attributable costs such as transfer of legal right, amortization of patent. So whatever cost which now you are incurring subsequent to the research phase is over, the development phase has been established, then all related direct costs which are attributable to that drug discovery and certain indirect cost, all of them. So when you look at any drug discovery process, there are doctors, there are scientists, there are people who are working with them. All of those costs, if you're using another patent or another technology, the depreciation cost of that, all of that is what is then eligible for capitalization. If there's a borrowing cost, if there's a direct overhead, all of them is eligible. The legal cost, the consulting cost, the insurance cost, all of them is what is eligible for capitalization. So visualize the type of product which you're trying to develop, and then how are you going to develop this. All those direct costs are now is eligible for capitalization from that perspective. So we talked about most of this as we progress. So quickly summarize and recap what we talked about. For an internally generated intangible asset, the hurdle rate for capitalization for internally generated intangible asset is quite high, and you need to distinguish all the costs which you have incurred between the research phase and the development phase. Research phase costs are all expensed. Whereas the development phase is eligible for capitalization provided certain conditions are met, and those conditions are like the technological feasibility has been or technical feasibility of the product has been established. You have the ability and the resources and the intention to complete the development of the product, and you have the ability to derive probable future economic benefit either by selling it or by using it. If you met all of these conditions, the subsequent cost which you have incurred in the development is allowed to be capitalized, and then the cost which are allowed to be capitalized are a direct cost and a certain element of indirect cost. Amount which are not direct or directly linked indirect cost, all of them are in a way like to be expense, like a training cost, like a selling general or administrative overhead cost. All of such costs are required to be expensed as incurred. Once a cost has been expensed, it is never allowed to be capitalized in the context of an internally generated intangible asset. And we talked about several examples which we see, like website development cost or a software development cost, or in some pharma companies we see some drug discovery cost. Though in pharma the hurdle is further higher because there is a regulatory approval is also what you required in all the situation, and hence there is further high hurdle, right? One is that you cross the research phase, you get to the development phase, and here you also look at the regulatory approval. So there are multiple hurdles you need to cross before you start capitalizing an internally generated intangible asset. But we see commonly, let's say ERP, right? You're doing an ERP implementation, which is nothing but enterprise resource planning, like an Oracle or an SAP or any other enterprise resource planning softwares. You have the cost of the software, the cost of the implementation, and all of that. Not the cost of the training, right? Training cost is not allowed, but the cost of testing is allowed to be capitalized. Try and remember all of that, from that perspective as to what is allowed, what is not allowed. The research phase is not allowed, but the development phase is allowed to be capitalized. And the asset, of course, has to be identifiable. And for it to be identifiable, it has to be either separable or a contractual legal right, from that perspective. So with this, we've come to an end to the previous section.